Good morning, everybody. Welcome to another day Market Report brought to you by Mike Bjork. Today is Hump Day. It's Wednesday, October 14th. Hey, we got a bit of economic news releases to go over today. This week is pretty packed full of economic news releases, so we're going to jump right into it. We'll start off with the retail sales for the month of September. As you can see, pretty modest. We met expectations. We had nothing basically in the month of August. September sales are supposed to have a slight increase of 0.1%, and we met those expectations. Now, if you strip out big ticket items like autos, we had a negative, the previous reporting back in August, negative 0.1, and 0.2, it was actually supposed to be negative 0.2, my apologies, that was a typo right there, but it was supposed to be negative, it was supposed to get worse in the month of September. It even got worse than what they projected at negative 0.3, so basically autos kind of carried projections in the month of September versus the other retails. Producer price index, this is the inflation number on the wholesale side of things. So this doesn't always portray into the most important thing, primarily because we're looking at consumer inflation versus wholesale, because if prices go up, it doesn't always get passed on to the consumer. But in this situation, we're actually looking at negative. So basically at consumer, we had no inflation in the month of August. We were supposed to have a deflation, or actually contraction inflationary number in September at negative 0.2, and actually went further down to negative 0.5%. So it dropped by 0.5% in the month of September. So that's pretty tough to watch, especially when we're concerned right now as inflationary numbers at 1.3 with the PCE currently. Business inventory still doesn't seem to be going anywhere, so this could be something we want to watch for in terms of for jobs. We have a zero back in July, and it was supposed to have a slight increase in August, and basically still nothing. Later today, we'll have the Fed Beige Book by 11 o'clock Pacific Standard Time. The Fed Beige Book will be released, and this could create some more drama in the market. So be cautious around 11 o'clock Pacific Standard Time if where the markets may move in this term here. So be very cautious. Stock market's down as a result, so they're looking at the data we're seeing today. Some of the other countries are also coming out with some bad data, other like Europe and stuff, not so good at news coming out there. And then also we have earnings reports coming out as well. So they're kind of seeing where data is and what the earnings of the third quarter for a lot of these companies that are out there, and that could be leading the way. But so far the Dow was down in the 90s so far today. As a result, the bond market's up. We're up currently about 25 basis points from where we left off yesterday. That translates to basically better interest rates today, better pricing for interest rates today. So we're getting to the high point again, so be very cautious here. We're reaching that level where, remember that resistance, or level 1, where we touched it about a week ago, and it came right back down. So be very cautious. We're reaching the levels where we'll get like a pull, where we get pushed back down a little bit. So be very cautious if you're kind of floating around with your interest rates right now. All right, folks. Hey, have a wonderful day. I hope you guys enjoy yourselves, and we'll look forward to seeing you guys tomorrow. Thank you very much for watching. Take care. Bye-bye.